banking sector. It's been a sector that has borne the brunt of the pain on Dalal Street, largely on account of the NPA problem. In fact, it's a sector that's looking to the government with bated breath to find out if Budget 2016 will mean more money by way of recapitalization and also a roadmap to address the NPA crisis. Ritu, Singh and Mathew bring you the banking sector's wish list.
IRB Budget 2016, now or never, on the CNBC network.
Capital. That probably sums up in one word what the Indian banking sector wants from Budget 2016. With total NPAs across PSU banks rising to nearly 4 lakh crore rupees at the end of December quarter and debates raging around the extent of restructured loans that could turn bad, capital infusion is topmost in the minds of bankers, rating agencies and market men alike. PSU banks are banking on their largest shareholder to deliver on its promise.
As far as the capital adequacy of the banks are concerned, the government is going to stand by the banks and ensure at all times that they will maintain the capital adequacy norms as laid out by Basel III and by the RBI.
Estimates on the extent of capital required to meet Basel III norms vary. The government has said that the total requirement over the next 4 years is 1.8 lakh crore rupees, out of which the government will infuse 70,000 crore. So far in the current financial year, 13 PSU banks have received 20,088 crore rupees as capital infusion. Banks are to receive a further 25,000 crore rupees in FY17. But rating agencies and brokerage houses say immediate capital requirements are much higher.
That 25,000 crores was set up in a scenario where probably the government was expecting that the NPL recognition will be sort of evenly spaced out. Now clearly that is being front-loaded, so the capital requirements are also front-loaded. So vis-a-vis what the government has announced, we think a lot more needs to come in, otherwise there's going to be some negative pressure on the real credit profile.
Rating agency India Ratings has estimated that the top 5 PSU banks, SBI, Bank of Baroda, Punjab National Bank, Bank of India and Canara Bank alone will need government infusion of as much as 63,800 crore rupees. These banks will also have to raise an additional 25,000 crore rupees from the capital market. The money is required to pad up balance sheets exposed to highly leveraged corporates as well as to meet Basel III norms. Given the change in economic circumstances and high levels of stress, Dalal Street as well as bankers expect the government to revise its capital infusion and increase capital commitment.
I do expect some amount of additional recapitalization that the government will announce. If you look at the period between, I think, 2008 to 2016, the amount of capital given to Indian banks is about $13 billion. If you compare that to China in similar periods of time gave $127 billion as capital to its banks.
While the budget is expected to address capital needs, a roadmap to clean up bad loans is also eagerly awaited. CNBC TV 18 has learned from sources that the Department of Financial Services, the RBI and the Central Vigilance Commission are working with banks to devise a new method to deal with bad loans, which may involve sale of distressed assets under a closed auction. Bankers and investors clearly have a lot riding on Budget 2016. The question is, will Mr. Jaitley deliver? In Mumbai with Ritu, Singh, Mathew.